everybody, welcome back to my channel. In today's video, I'm going to cover one of my most favorite topics that typically is a real snoozer for a lot of people, but it really shouldn't be because tax strategies are very exciting as they save you money, they help you grow your wealth quicker and more efficiently. So everybody should be interested in tax strategy. So I'm going to cover 3 of my favorite tax strategies that you can actually utilize yourself. Okay, so before I get into it, punch, smash, I don't know, whatever you got to do to the like button, do it. Like this video for me. Let's get the algorithm working so more people can learn about how to manage their money better. Okay, I appreciate it. So, the very first tax strategy that I absolutely adore is managing your own IRA to save on fees. So, a lot of people don't realize this that you can actually have a 401k at work or a 403b or whatever it is that your work retirement plan is. You can actually have that. And in addition to that, you can also have a personal IRA that you can contribute to. So, whatever your retirement plan at work is, they are going to be charging you most likely administrative fees, and there are going to be fees for the investments that you're actually in. A lot of people don't know that. They think this stuff is free, but it's not. Your administrator is charging you fees for your retirement plan. Whether those fees are low, high, medium, I don't know. You got to go find out. And that's something I highly suggest you do before you implement this strategy because that's key to the strategy. To save on fees over time and to save on being able to utilize different strategies like Roth versus traditional, you can go get your own IRA account. Obviously, there are many traps that I talk about a lot with IRAs in terms of income, if you have access to a plan at work. So you have to know these things, and I teach these in my mentoring program so that you can make the right decision. But for the scope of this video, I want to keep this very, surface level. And so that strategy would be instead of paying for the fees at your retirement plan at work, that might be rather high because some retirement plans at work, they will put you in high fee mutual funds and you're kind of stuck and you can't really invest in exactly what you would want to invest in. So the key there is know your tax rate, know your effective tax rate, know your marginal tax bracket as well, and utilize an IRA and put money into the IRA that you can manage yourself at low fees, low cost. Okay, and that's going to save you money over the lifetime of your investing career because guess what? Fees eat into your net worth over time, believe it or not, and we want to try to reduce that risk as much as possible. So one of the ways to do that is to just utilize your own IRA and invest it yourself by basically buying an ETF or a mutual fund. I mean, it's never been easier to create a well-diversified portfolio for yourself than it is today. And so you could do that. It's not as hard as people make it seem. Or you can utilize a robo-advisor with a personal IRA. So you can literally go to Betterment, Wealthfront, name your robo-advisor that you would prefer. Many different brokers offer robo-advisors now. And you can open an IRA, whether it's Roth or traditional, depending on your tax situation. Strategize that, please, properly. And then you can open up that robo-advisor via an IRA. And so that's usually pretty low fee. Maybe you're paying 25 basis points for a robo advisor instead of, maybe that fee might be higher with a retirement plan at work. Maybe not. It just depends. So this is a strategy that I really think could be helpful for people. I know people personally that invest money with a advisor and they're being charged 1% on their assets. And, if they keep investing that money there, that's obviously going to be a cost to them over time. And so sometimes they, want to maybe take control over it a little bit and have some money that they can invest the way that they want to, or they can just invest in low fee index funds and call it a day themselves and save the money. So that's a strategy that I think is pretty cool that you can utilize. So to recap, the steps on that would be A, find out your administrative fees at your retirement plan at work. B, find out what the fees are for the funds that you're actually in within that retirement plan at work. And then you're going to want to make the decision to open an IRA based on your income level, based on your tax bracket, open up the proper IRA, personal IRA, and you can basically purchase low-cost index funds or, different types of ETFs yourself and manage it yourself and kind of save on fees by having some capital in a personal IRA. The second tax strategy that I absolutely love is really actively managing if you're contributing every single year to a Roth or a traditional IRA based on income for that year. So not everybody has this issue. Most people have pretty consistent income. They know what every single month, every single year their income is going to be. And so for them, this is maybe not going to be so important of a strategy. But for people who are freelancers or business owners, or maybe you are in sales and you don't have as much income in certain years as you've had in other years, this is absolutely a strategy that you can utilize. You can, in low income years, low tax rate years, contribute to a Roth, take advantage of locking in a low tax rate. And then in higher income years, you can take advantage of a traditional IRA and get the tax deduction for contributing to the traditional IRA. So I love this strategy for people. A lot of, my family and friends, I try to teach them this strategy so that they can utilize it and take advantage of the right tax deduction or non-tax deduction for them, because this can be really impactful. If every single year you're just doing the same exact thing, you are not really taking advantage of strategy at all. You're just kind of doing the same thing, when really, if you utilized Roth in certain low income years, you could maybe grow your net worth by X percentage more, because of the beauty of the Roth being able to grow and then the gains being tax free later. That can be a pretty impactful thing if you invest the money in the Roth properly. And that leads us to our third tax strategy that I love, which is utilizing asset location in particular different types of retirement accounts, okay? Or non-retirement accounts. So what I'm trying to say here is put specific types of assets in specific types of accounts to help you manage your taxes. So example, a big example would be in a taxable account. So an account that is not tax deferred, it's not tax advantage. You do not have to wait till you're 59 and a half to take the money out. It's literally just a taxable account. So one thing you could do in a taxable account is take advantage of long-term capital gains. Long-term capital gains are going to be lower tax rates than short-term capital gains or ordinary income rates, right? So essentially what you're doing here is you are putting highly appreciating assets that you're holding for a very, very long time, think years, think decades, in order to take advantage of holding them for over a year to be able to utilize long-term capital gains rates, which are more favorable. So think about, if you're going to be investing in a taxable account, do you really want to be doing short-term trading there? That may be a tax nightmare, and you're going to have to deal with the taxes on that every single year, right? And then if you do have gains, those gains are going to be taxed at short-term capital gains rates, which are higher than long-term capital gains rates. So this is what I mean by asset location for tax strategizing. So what you could do in the IRA is, if you wanted to do a little bit more short-term stuff in an IRA, you're not having to worry so much about the tax situation there, because you don't pull that money out. It's tax deferred until retirement, right? So that is what I mean by asset location. Another thing with asset location is thinking about a Roth account. Roth, the benefit of a Roth IRA is that the gains are tax-free when you pull them out in retirement, right? So since the gains are tax-free, what you'd want to do is you'd want to put highly appreciating assets in a Roth. You'd want to be putting things like stocks in a Roth, anything that you think is going to be highly appreciating. So if you're looking at putting in stocks versus bonds, right? Well, bonds are less volatile. Bonds typically, are not going to have the higher return profile that stocks will. So you'd want to maybe put stocks in a Roth instead of putting bonds in a Roth, because you want highly appreciating assets in a Roth so that you can take advantage of those tax-free gains later in life. So this is a really important strategy, and I utilize this every single day in my own investing when I'm thinking about allocating, when I'm thinking about taking a trade, when I'm thinking about taking an investment. I am always thinking about this and putting the right asset in the right type of account. And if you have no idea what I'm talking about, no idea how taxes work, no idea the difference between long-term capital gains and short-term capital gains, I highly, even if you do know, but you're not for sure clear on a lot of this stuff, I highly suggest looking at my mentoring program. It is going to be what walks you through all of the things that you need to know when it comes to tax strategies, the different types of accounts, how your taxes are actually calculated, and the landmines, the expensive landmines that you need to watch out for when it comes to contributing to an IRA. Because guess what? This is the United States tax system we're talking about, and they don't make everything super crystal clear. So I teach you what to look for and how to not get yourself in a bind. So if you liked this video, please like it. Please subscribe to my channel if you're not already subscribed. I help you learn how to manage your money better and strategize taxes and get invested and all the things. I'll see you next time.